Good afternoon and welcome to Pincus Co Live. Today we're speaking with Lazer Sternhell, CEO of Cignature Realty, about a recent spike in large multifamily building trades and if this is the final gas before the market cools, or is there some wind underneath this trend? I wanted to speak with Lazer since he brokered one of the large recent deals, 260 Gold Street, for $225 million that recently closed, to ask him if there's more out there. I'm Adam Pincus. I'm the founder of the three-year-old news and data company Pincus Co Media. And this episode is sponsored by G-Parency, which is a provider of technology solutions designed to empower commercial property owners and reduce the reliance on certain high-tech, high-cost service providers. This is our 14th in a weekly series of live broadcasts, and prior episodes are available on our YouTube channel. So Lazer, I wanted to just start with just asking you whether you think there is more to come, and then we'll look at some stats. We've got some charts that we've got to look at who's the volume of buying and that sort of thing. But first, Lazer, thanks for joining. And
Thank you. Thanks for having me, Adam. How are you?
Sure. So what do you think? Do you think there will be more of these large building sales, and why are they happening now?
I am not sure about the market in general. That's attributable to the rate hike that happened last week, and future hikes are expected to happen. So many of my clients that I'm speaking to are concerned and saying they're going into a holding pattern. As it relates to the deals that you mentioned that recently closed, I think you'll realize that many of them are either heavily concentrated or fully free market buildings. And since the rent laws of 2019, which really negatively affected the rent stabilized sector, free market buildings or heavily concentration of free market buildings have really become a hot commodity, and they've been trading at very aggressive cap rates. And those are really the deals that we're seeing happen as of recent.
So I want to put up this chart that we have where we looked at multifamily sales above 100 units over the past 2 years. So 2020 was a slow year, and there was just over $2 billion with nearly 60 trades. Then last year went up to nearly $6 billion. And then this year it's above 4 billion, and then we're only halfway through the year, although the actual number of trades is a little bit lower. What does that say? Where do you think those sales are coming from? Like what encouraged people to close now, and on what kind of asset?
The anticipation of higher rates, and it's been a discussion over the last couple of months that they were coming. That definitely encouraged people and motivated them to close as soon as possible so they can lock in more favorable rates.
So that focused, I guess, is nothing I have to focus people's minds, but that sped up possibly some deals that were in the works just to get them going now.
Most definitely.
All right.
And I have several deals right now that we were working on for months, 4 in particular, that have hit a brick wall, so to speak.
Because they didn't get there
fast enough, they didn't lock in fast enough, and rates are higher, which means the buildings can afford to pay less of a mortgage, which translates into the bank lending less money. So the buyers have to come back and renegotiate. So that's what I'm going through right now as we speak.
And what do you think the impact on these, looking at these larger deals, do you think people are will the sellers come down, or do you think they're gonna just wait till the next cycle?
Well, real estate never stops. It goes up, it goes down, but it really never stops. There's always people that need to sell or want to sell, but it does take time to adjust. And it'll probably, if you had to forecast out for the next 6 months, It'll probably be an adjustment period where sellers are going to come to the realization that if they really want to sell, they have to make their price adjustments in order for their property to sell.
Another thing I wanted to look at is the distribution of where these large sales are happening. So we looked at by borough, and basically half each year are in Manhattan. Does that correlate with what you're seeing out there in terms of the activity?
Well, there are many more free market apartment buildings in Manhattan
Mm-hmm.
than in the boroughs. So I'm not surprised by this graph.
And in terms of what your marketing for sale is, you're mostly focused in Manhattan. Like,
yes, we specialize in Manhattan.
What areas of Manhattan are having more activity? I mean, whatever's left of that.
We cover the whole Manhattan. We do
Uh-huh.
heavily concentrate on northern Manhattan, upper Manhattan.
Mm-hmm.
We do a lot of business up there, but we trade all over the city.
But in terms of activity or in terms of like interest in product, where is there any kind of concentration?
A little more south because there are more free market apartments.
Mm-hmm.
You know, in south of Manhattan, south of 125th Street.
Uh-huh.
You know, and again, I keep on reiterating the free market thing, and you know, the reason for that is post-pandemic, more people are returning to the city. Companies are requiring employees to come into the office more often, and also if you dig a little deeper, relating back to the 2019 rent laws that I mentioned.
Mm-hmm.
Prior to the rent laws, you were able to deregulate a vacant apartment and bring it to free market. But one of the foundations of the laws were that you can't deregulate apartments anymore. So that means every year there used to be several thousand apartments that would come out of rent stabilization and become free market. That's not happening right now. So obviously there's a crunch, and there's a less supply and more or the same demand. And that's really putting pressure on the free market stock.
When you talk to residential brokers that are operating in these kinds of buildings, what are they telling you on the ground? That kind of story this is what's happening?
Definitely. I spoke with a broker, a friend of mine last week, and he said there's 10, 20 people for every vacant apartment. Literally, they come on the market and they fly right off the shelf. And many times even above asking.
And is that seen as a direct relationship? Because there was like a release valve of like every year these thousands of apartments coming off, and now that's just kind of been shut off.
It's a thought,
Mm-hmm.
but it's a fact. It is a fact. There were thousands of apartments that came free market
right
each year, and that stopped. So if you have even the same or more people looking for free market apartments, and there's a few thousand coming to market less, then obviously it's all about supply and demand. You know, if there's more demand than supply, the prices go up and the demand goes up.
Mm-hmm. And when you're talking to sellers right now, what is their mood, and how you try to get them to kind of get off and sell?
Right. So if it's an owner that owns a free market building, we can convince them to sell because we can offer them very aggressive cap rates and good prices. That always helps motivate a seller.
Mm-hmm.
And many of the rent stabilized owners are looking to get out. If they can get out whole, you know, pay the bank and walk away with some money, they're interested in doing that. And many clients that were buying rent stabilized apartment buildings for years are looking to get out of New York and started buying around the country. And we
Mm-hmm.
see more and more of our clients telling us that, you know, do you have anything around the country to sell? Because they're looking for states that are more favorable to landlords, where there's more upside in the rents, and less bureaucracy and red tape and regulations.
Are they selling? Are they getting out of the city?
If they can, I would, in a very rough assessment, if you looked at prices prior to the rent laws and prices today, these rents, heavily concentrated rent stabilized buildings are trading at 50, maybe 60% less than they were. So it's not always easy to get out.
Mm-hmm.
And when you can only get half or a little less than half than what you paid for, you still have a mortgage to pay off to the bank and equity that went into the deal. No one likes to lose money. So many of them are stuck. Many of them are holding on and hoping to survive until things change and turn around.
And the recent increase in the RGB gave a bump this year after having nothing for a couple of years.
Definitely a big relief. And we say it over and over again when clients say, "Why should I buy a rent stabilized building? Expenses are going up and rents are staying the same."
Mm-hmm.
At least now we can counteract and say, we got a 5% 2-year bump and a 3.5% 1-year bump. So rents are going up. So at least there's some optimism and some relief and at least something going right for the landlords. So that definitely is a very positive thing, that increase.
We looked at the number we looked at sales during the peak of the market. There were, of course, hundreds. Were peak defining as 2014 to 2018, and looking through who was doing buying at that time. So it was these are names that are very familiar to everyone in the business: A&E Real Estate, Olnick, SW Management, Omni. They do affordable. Camber. They also do affordable. David Levitan, David Malik, Camabees, Carmel Partners, Clipper, Thor Equities. Are any of those guys trying to get out now?
I don't know if anyone's looking to get out, but you mentioned A&E. They're being very aggressive, and obviously
They're still buying.
This is a time to buy, and they're also, from what I could tell, upgrading their stock. They're buying more quality properties than they traditionally did. But all those names that you mentioned have not been exceptionally active in New York the last couple of years.
Actually, just not a correction, but just something to add. Carmel Partners is selling 19 Dutch down in being marketed by Cushman and Wakefield, but I don't know where that is right now. But I haven't heard of most of the others. I haven't heard of selling property.
Like I said, everyone's in a holding pattern.
Mm-hmm.
It's not a time to sell. Prices are down, and who wants to sell a building for less than they paid for it?
Mm-hmm.
So if you can survive and hold on, real estate has shown historically that over time things do turn around and prices and values go up, and that's basically where people are.
Do you think there are going to be new buyers coming in? Are you hearing any of that, or do you think people are coming?
Everyone likes a deal, and if rates continuously increase and prices really come down, I'm sure there'll be some bargain hunters coming into the market and taking that opportunity. But I haven't seen it as of yet.
And in terms of strategy of trying to find buyers right now, how, like from the buying side, are you reaching out to new people, or do you stick with your old kind of tried and true buyers?
Yeah, it's very interesting, and every year or every 6 months, the buyer and seller pool seem to change here in New York.
Mm-hmm.
Always some people that are active, and then they drop off, and then they don't buy anymore or don't sell, for a while. But we're dealing with our old Rolodex and reaching out to people that understand New York and still believe in New York. And we think that New York is a buy right now. If you're familiar with real estate around the country, cap rates are going at 3.5%, 4%. You can buy in Manhattan at 5.5% cap rate. So comparably, New York is definitely underpriced and undervalued right now. However, it has its issues that come with it that hinders people from, getting very aggressive on it.
Hmm. And from the political side, like what are people thinking is going to come after this election right now with in the state? Are they anticipating that there's going to be greater restrictions with good cause eviction, or does that seem like that's on hold for a while?
Good cause eviction is definitely something that people are concerned about, and many people believe it will go through. Although Governor Hochul has said that she's going to be more friendly to the real estate industry than her predecessors, but time will tell. It's all politics. We know how that works. And there's several court cases going on right now that are disputing the 2019 rent laws, and we'll see where those end up going and how successful they are. If there's any relief in the laws, then we could see prices pop back immediately.
Mm-hmm.
But right now, the way the laws are instituted, it's really, really tough to do business here in New York right now.
And in terms of what are some of those cases, not the specifics, but what are they hinging on? Which aspects of the law?
I'm not privy to the exact legal
Mm-hmm.
terminologies, but basically it's a deregulation aspect that they're focusing on, because it's not really that protects a tenant. The tenant is moving out, so it's really only something that hurts a landlord, and that's a big focus of the case is on that.
Uh-huh.
And the general legality of rent stabilization and rent control. How if that's something that's legal to to tell someone
Mm-hmm.
that they have a product and you can only charge a certain amount when the market value is more.
Right. I've been looking at tracking some of the court cases that we see as we're looking every day, and there's typically one or two a week that are a landlord is trying to dispute an issue where a tenant used a very, very old rent figure going back 5 or 10 years before they owned it, where they're alleging that the landlord destabilized the unit. And they're very interesting cases because some of them look like maybe the landlord did do something improper, and then other ones they're like, who knows. How does that play into a building sale when you're trying to do
Very
due
difficult.
diligence?
Very difficult. If one of the biggest obstacles and hurdles that we have right now is paperwork.
Mm-hmm.
Buyers, if they see deregulated apartments, they want to see bills, they want to see invoices, they want to see transactions, they want to see proof that that apartment was legally and correctly deregulated. And if the paperwork is not available, that makes the sale a lot harder, because as you say, in many cases, and there's great liability.
Mm-hmm.
You could go back many, many years with penalties. It could be astronomical numbers that people would be risking by buying that property. So paperwork is very, very, very crucial these days.
Can the landlord request from DHCR their records? Like, is there a
Right.
way?
So they'll always pull a DHCR,
Mm-hmm.
but DHCRs they'll only list the rent stabilized apartments. They won't have the free market apartments, and the DHCR they don't really research if that apartment was deregulated properly.
Right.
But what landlords do look for when they pull the DHCRs is if there are any open cases, if there are any disputes or any violations that halted rent increases or anything like that.
Mm-hmm.
So they will always pull the DHCRs and review them very carefully. And
They
many
can't,
deals die for us at that point.
I'm sorry?
Many deals die by
Uh-huh.
us
Right.
by that point. They pull the DHCRs. They don't like what they see. There's a lot of open cases and a lot of liability, and there goes the deal.
With some of these cases, it looks like the tenant will go to DHCR in a free market unit and then go back to, and they'll get the records when it was still rent regulated. The landlord doesn't have that right, or the
Sure,
buyer?
sure. They can pull the DHCRs.
They can? Oh, even for
Every
non,
owner can pull the DHCRs at any given time.
okay. So they could do the same due diligence, so that's conceivable. It's not,
Yes, yes. And that's basic due diligence for people that buy multifamily apartment buildings.
mhm.
Is pulling and reviewing the DHCRs.
And going, is that like a whole industry now where people, or
It is industry. There's law firms and several individuals that make quite a nice living reviewing the DHCRs, calculating the risks and what the liabilities are, and that's definitely an industry that's
that just is
developed over the
taken
last
on?
couple of years.
Uh-huh.
You know, an owner will pull the DHCRs, hand it over to these individuals. They'll do the analysis and come back to you and say, you know, this is your liability. These apartments, you need paperwork for it.
Mm-hmm.
If you don't, this is the dollar amount that you may be liable for. But that's definitely happening, and any prudent, knowledgeable buyer is going through that process right now.
And yeah, do they, and does that take weeks, or is that how long does that take?
Depends how busy they are. It
Uh-huh.
shouldn't, but it usually takes about 2 weeks, from my experience, the turnaround. But you know, some of them are quite busy, so
Mhm.
we've had deals that we've had to string along because the DHR analysis haven't been completed.
And back to looking at the buyer pool, is there anything that changes when the market, if, I mean, sort of this split market, like we've seen, looking at these numbers, it's been a little bit more active, but it seems perhaps going forward, or how do you see going forward, it's going to be slower this year? I mean, do you think this?
Interest rates are definitely one of the major industry, if not the industry, that gets affected most by high interest rates is real estate.
Mhm.
And the 3/4 of a point bump that we saw last week, if the Fed is looking to control 8% inflation via raising the interest rate, it's going to take a lot more than 3/4 of a point. So I wouldn't be surprised if we see interest rates in 8, 9, maybe even 10% bracket, and that
Uh-huh.
will very, very, very strongly affect the real estate market.
And
So,
and what's the anticipated outcome of that? Like, if you have this, is the idea that it'll go up for a year and be really high, or it'll stay up just to like squeeze out inflation? Like, how, in terms of thinking about buyers, like how do you
buyers
calculate?
are very concerned. If you sign a contract today, and you know you're figuring on getting a loan at a 5.5% interest rate, but as if you're in a cycle, interest rates are moving up in 90 days or 60 days. When you're ready to lock in your mortgage, rates may be up to 6% or 7%.
Mm-hmm.
The deal doesn't work. So everyone's in a holding pattern. Everyone's very concerned until I think they feel that interest rates are more stable. I think we're going to see a lull in the market, unfortunately.
Can a buyer, can't they buy some kind of interest rate lock or something like
Banks
that?
will not lock in. I'm not, again, I'm not a mortgage broker,
Right.
but it's a couple of weeks.
That's it. Okay. So it's no.
Or before that they'll lock in a rate, because the bank pays interest as well. So if interest rates are moving up and they lock in 90 days before, they can get hurt themselves. So they back away from doing that.
And in terms of some of the sellers, do you go and make a you make a pitch to them and go, or are you kind of having people come to you who have decided that it's time for them to sell?
Oh, we have a team here in our firm, and we cold call. And we
Mm-hmm.
call hundreds of people a day. If it's a building that has a lot of free market, we're telling them if good cause eviction comes through, then their building is going to be worth significantly less. So this may be a good opportunity to sell. And it's a numbers game. The more people
Mm-hmm.
you call, the more deals you make.
And what's like right now, I assume it's much harder. Is it harder to get them on the phone, or they're just talking and talking because they have no intention to sell because they
Cell phones are very important. Less people are in their offices. Now we're realizing for sure. Office numbers are not as valuable as they used to be. We break our heads trying to find cell phones. People like cell phones. People like texting, and definitely it's changed in that way.
And when you do make contact, is it because talking about the market mood right now, does that make people more willing to talk because maybe they're not going to sell, or does it make them more interested in trying to get information from a broker who has some wide view of
It all
the
depends on the relationship you have with the client. If you have a long-term relationship, obviously they'll speak to you, but we get plenty hang-ups immediately.
Mm-hmm.
Like that. But as of recently, owners want to know what's going on. They definitely like to pick your brain to see what's going on and what we think is going to happen in the market because of their concerns.
In terms of the sort of professional owners versus the individuals or family that owns like one or two big buildings, do you see more or less likelihood that they would sell now?
I think that the larger players are, from what I've been reading and seeing, are not believing in New York as much as they used to, and they're looking to exit New York.
Mm-hmm. And with these recent sales, some of them are selling above what they were purchased for. Is that just because they bought it so long ago, or where do you think the market is?
No, I really believe, and I keep on reiterating this, the free market buildings are getting very, very healthy prices.
Mm-hmm.
And if you have a free market building, you can sell it for more than you bought it for several years ago. No question about that.
So, do you have anything else to add? Any other aspects on this market right now?
No, we're just anticipating to see what happens with interest rates and see how it affects our market. And as brokers, we make money with movement. So if the market moves up or down, that's how we earn our living. So it's when the market is stagnant, which probably is the pattern we're going into
Mm-hmm.
for the next 6 months, we're concerned here, but hopeful.
Well, we got to be hopeful.
Correct.
Well, Lazer, thanks so much. Thanks for taking the time.
Welcome. Thanks for having me.
All right, and good afternoon. Thanks.
Have a great day. Thank you.
Bye-bye.